Hello, viewers. Welcome to this edition of Sense 360 Investor. In today's video, we're going to take a look at an educational segment. So, kind of speaks to trader wealth equities and um, indexes. So, before we begin, quick word about the disclaimer. Please pause, read through this before continuing. Thank you. Okay, so without much further ado, let's begin the show. All right, so this is a continuation on our theme of running your trading and investing business like a business. And so we continue to build out different ideas. In previously, I've covered like the business plan, the financial plan, basically centered on the what, operating plans, and the HR plans on the how. Today, we're going to take a look at IPOs that come to market. And IPOs are fairly popular in certainly within the trading communities because they can move very fast and they're an opportunity to make fast money if you know what you're doing and you're able to spot the setups and the trades. And IPOs usually come to market before they're issued and go on the exchanges. There's usually a roadshow where the companies and their investment bankers kind of go out and present the company and showcase the product services and why it's a good one to invest in. Typically, you can sign up with brokers like Fidelity, Charles Schwab, etc., and get notification of when new issues come to the market. And sometimes you can actually participate within them if they have enough shares to hand out. The investment banker that brings the IPO to market is critical. So there are some are better than others, and so it's worthwhile taking a look at who the investment banker is and see what their track record is. So you'll quickly see which ones are quality ones and which ones are maybe need a little bit more attention, and maybe you may want to wait on those issues. The other thing with IPOs is that sometimes it's just better to have the company go through a number of reporting cycles so that you can get a feel for what their business model looks like and how management is responding to the marketplace, and also to the new ball game of having to do quarterly and annual reports. Also, the ability to listen to earnings transcript calls gives you a feel about the tone on how management is handling Q&A, especially tough questions, and what they're thinking about the future landscape and future scenarios. The other place you can also get information is industry presentations. So not so much with the IPO companies, but there will be some. Most of that will come from the IPO roadshows. But one of the things that you want to be building a picture of is, what is the company's total addressable market, because that will give you an insight into their growth prospects. Okay, so that's kind of a background on what you need to look out for. So let's talk a little bit about IPO financials. Ideally, you want to see 3 years of financials, and that could be pre-trading as well. But you want to see 3 years, a track record of 3 years. If you can't get hold of 3 years worth of data, then you want to look for at least 8 to 10 quarters if you can get that. And under 8 to 10 quarters, it becomes a much more riskier proposition because you just don't have enough data to analyze. And within the 3 years or 8 to 10 quarters, you're looking for a good 6 quarterly of earnings that have huge growth, and coupled with a 6 or more quarterly sales with huge growth as well. So you're looking for huge growth for at least 6 quarters out of the 8 to 10 or quarters of data that you have. And so if you combine that with a concept called box one theory, which comes from HGSI, there you can look for earnings and sales that show triple-digit growth on a quarterly and annual basis. And you also want to see rising demand because you want to see interest from institutions coming in to buy the shares. Okay, so let's now take a look at some IPO legends and we'll showcase a few of these. So the first one out of the gate is Google. Google, and these are monthly charts. So Google, we can see kind of pumped out, formed a consolidation, multiple consolidation here, and then went on to continue this run. Another consolidation continued this run before it kind of topped out. And these are split adjusted prices. Then we had this big the Great Recession, comes out of there, forms another base down here. There's a couple of opportunities, but then from about here, you can see it goes on to make a 10x move. So this one was successful straight out of the gate. They're not all like this, but had you gotten in even after the IPO, say these are months, this month, 1 month, 2 months, 3 months, 4, 5, 6, 7, 8, 9. So there's 9 months, which would have given you the 3/4 worth of data to take a look at. And then coupled with that, and the pre-IPO financials. Let's have a look at Home Depot. Home Depot, different case, was not successful out of the gate. Actually, kind of came down for the first couple of years. In this, we can see it finally makes a turn about 1, 2, 3, just over after 3 years in. So now you're 3 years worth of data. Starts to make a move. You have a nice consolidation here, and at this point, it's these are split adjusted prices as well. And you can see there's a split here, 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 split here. So on its run, Home Depot split 1, 2, 3, 4, 5, 6, 7, 8, 9 times, and that's pretty indicative of high growth stocks in during the 80s and 90s, where they would split quite often. Then the share count would go up, but it was compensated for the huge growth that the company had. So even with Home Depot, you could have gotten the equivalent price of well, split adjusted price is like a buck, but from there you can see 253-fold move in total. But along the way, obviously, there were periods of consolidation, which would, I mean, if you had sat on most of this, you may or may not have sat through this, depending on your time horizon. But if you'd gone out taking your profits and you could have jumped back in, and here you see a little bit of a climactic run starting to occur. So they're vertical, and then we go to this big um, consolidation. Finally comes out around 2013 when the market super cycle begins. Okay, so let's look at one more. Let's take a look at Schwab. Schwab was the worst coming out of the gate of all three. You can see after its IPO'd, it just tanked and kind of put out to pasture for a good 4 years. Finally comes out, takes out the IPO high here in the early 90s. And again, you can see all of these split adjustments in Schwab as well. So this was a big disruptor of online brokerage trading, made brokering simpler for the retail investor. And so we can see on a split adjusted basis, call to point, 2 by 70, huge multiple. But here you can see a blow off top. So Schwab basically went from like the price adjusted price of $10 and within months went up to 70. So that was a 7x run just here. And if you'd caught even just this, that trade, obviously would have made a huge impact on your portfolio. But this way you can see the growth in the upswings, and there were opportunities to jump in a few times. And if you manage this um, holding, then you would have experienced a massive portfolio growth. And again, just like Home Depot, we can see it was put out to pasture for many years, and it's only just started to kind of trade at or near its highs back from 99 highs. So this one to watch coming back in. Okay, so that's IPOs and what to look for in terms of fundamental analysis, what to watch out for in terms of financial analysis, and basically kind of a quick brief insight into how to manage those massive runs if you get a good IPO, able to capture one. So the best way to look at these is to keep track on IPOs coming to the market, building a watch list around those, figuring out the ones that are kind of making a move with their financials and kind of focusing on them, then using the charts to pick your entry points and manage your positions. And this video is part of the running or trading like a business. And so this would be equivalent of bringing a new product or new service into the market and growing it, expanding into different regions, different states, and even maybe internationally. Okay, thanks for watching. Thanks for listening. I'll see you next time. Goodbye.